Hello everyone, we are Team 3 and we will be presenting on topic mergers and acquisitions in and out of emerging economies. This study is conducted by Sergey Lebedev, Mike W. Peng, NZ and Charles E. Stevens. To analyze the acquisitions in and out of EEE, we will first provide a brief overview of mergers and acquisitions role and demonstrate the purpose of conducting this study. And later we will figure out what new insights and outcomes can be gained out from this paper. So beginning with the brief information, mergers and acquisitions are common business tools used by numerous companies around the world. They create a new economic, social and cultural environment and allow strong companies to grow faster than competitors. Mergers and acquisitions help to expand a company's reach or gain market share to create shareholder value. Emerging is the one that is in the process of developing its economy to become more advanced. Firms based in emerging economies are not only undertaking M&As inside these rapidly developing economies, but are also very active in undertaking M&As outside of their domestic markets, which is cross-border acquisitions. Numerous studies have been conducted on mergers and acquisitions in and out of developed economies, but there are only few studies focused on M&As in and out of emerging economies. The paper develops propositions regarding the antecedents and performance of M&A in emerging economies and mainly focused on its research on antecedents and outcomes like M&A performance and factors affecting performance, and helps to uncover what new insights can be gained and what is the purpose of conducting this study. So beginning with the review methodology, during the whole process of comprehensive research, authors identified and reviewed 51 studies and found the domestic and cross-border acquisitions motivation and performance outcomes from both acquiring and target firms. This figure highlights the correlation among the cells differentiated in terms of developed and emerging economies. Major studies examine the cell A, like acquisitions within or between DE, but we are focusing on cell B to D from the perspective of emerging economies. Domestic acquisitions, acquisitions of domestic firms by foreign firms, and vice versa will be discussed. Moving on further to antecedents. Antecedents are the main forces or the factors behind the acquisitions. The decision of M&A depends on all these factors and elaborated in the given diagram, which we will discuss now. Mode of entry is the first one. So from the perspective of firms based in DE, cross-border M&As are found to be the preferred entry mode in emerging economies. Scholars also find that there are various factors positively associated with the likelihood of undertaking acquisitions in emerging economies. For instance, firm size, market-to-book ratio, stock price performance, and liquidity, as well as the better judiciary systems in host countries. An interesting new theoretical concept has been demonstrated under mode of entry as brownfield acquisitions. These are the acquisitions which are cross-border, in which resources and capabilities are primarily provided by the investor, replacing most of the acquired firm's resources and capabilities. This almost leads to the transformation or restricting of the purchase firm because local firms' technological and managerial capabilities are weak. Next is the market power. Many international banks M&As demonstrates that acquisitions of firms in EE can be motivated by market power. Like Western banks are more likely to acquire less efficient banks. This validates the efficiency motivation for acquisitions. Market power motivation can also be observed in transition economies undergoing privatization. Their findings suggest that foreign acquirers prioritize horizontal expansion over vertical integration. Next one is the prior acquisition experience. This is also a main determinant that has been found that previous M&A experience increases the likelihood of subsequent acquisitions. Firms from EE and DE also face a choice whether to pursue product-related or unrelated acquisition, which is influenced by their learning and experience. By analyzing 808 acquisitions in this paper, studies say that M&A experience in DE increases the likelihood of firms based in EE using the exploitation mode, whereas M&A experience in EE has no effect. Real option perspective depicts the firm's choice between greenfield investments as real options and acquisitions when entering emerging markets, and also suggests that acquisitions should be completed in several purchases rather than a single transaction. Country characteristics is the next one and can be defined as country-specific advantages and firm-specific advantages to achieve a comparative ownership advantage. Institutional factors. The quality of financial markets, which is shaped by the institutional environment, is crucial for acquisition entry. Countries with stronger corporate governance and investor protection to select better performing targets in countries with weaker corporate governance. M&A transaction costs in EE are generally higher than in DE, including due diligence, negotiations, and post-acquisition integration. Network characteristics are specifically due to high levels of uncertainty and absence of established institutions. Firms in these countries must rely more on networking and managerial ties with other firms and with government officials. M&A in EE may be a way to improve network positions for both the acquirer and the target. Other antecedents or the other factors suggest that additional new factors influencing M&A activity are pride institutions and latecomer disadvantage. Thus, the key findings highlights different factors affecting M&A performance in terms of developed and emerging economies. These are differentiated and are highlighted under DE and EE. Overall, the paper suggests 5 propositions regarding EE M&E antecedents and performance. Overall, higher institutional development in a target firm's environment is related to better corporate governance quality, facilitates both domestic and cross-border EE acquisitions that are defined in Proposition 1 and Proposition 3. Another important factor is the latecomer disadvantage of EE firms in different areas, which prompts EE M&Es to prefer cross-border acquisitions over other entry modes that is defined under Proposition 2. Furthermore, a government influence may have stronger effects on acquisitions involving target firms in EE than in DE, that is defined under Proposition 4. Only the interaction between institutional development and network effects in the context of EEM&Es has received some empirical support, and Proposition 5 says that.
Institutional development has been seen as a key factor for acquisition in an EE. It has a striking effect in the acquisition of firms and businesses under an EE. This research points to the existence of key channels that link the institution to distress acquisition via legal codes, protection rights, and law enforcement, reforms, and a market environment that impacts financial performance. Furthermore, it brings direct evidence regarding the importance of the quality of institution with respect to acquisition in emerging markets. There is a solid evidence showing that the progress in reforms and the cultivation of the institutional environment is linked to economic processes in emerging economies, namely with respect to firm performance, efficiency, survival, or recovery from financial distress. This shows that the quality of institutions between developed and emerging markets are directly important with respect to acquisition in emerging markets. Research proposed that organizational factors such as international experience, firm size, and attributes of the hosting country manifested by the industry growth and country risks together affected American firms' speed of entrance into China when China opened its market. However, their research context is less helpful for capturing the current transitions in the FDI landscape, as most equity now initiates from emerging economies. Although recent studies have started to redress the lack of research, most of those initiatives suffer from different incompleteness issues. This calls for more examination of the BRIC and antecedents of the burgeoning OFDI initiated from emerging economies. Relating to the factors suggested by the research, 5 new striking points were laid. A more redefined categorizing of EE. The clear segregation given to some countries as EE and the limitation this category has caused has led to the redefining of this category. Cross-border M&As undertaken by new MNEs from the DE may differ from those from mid-range EE, such as BRIC. Thus, recognizing and giving account for these differences might be beneficial for our future research. 2. Insufficient comprehension of domestic M&As in EE has resulted in an adequate foundation and without further knowledge on cross-border M&As within EE. It is more likely to be affected by local institutional and market imperfections to the greatest extent. 3. Managerial self-interest, which is a key factor to M&A in and out of EE, needs to get more light, as CEO's compensation is significantly determined by the size of the firm. They have a strong incentive to make the firm bigger. For instance, Chinese M&A managers may be especially prone to empire building, since their compensation is much less than what executives from DE receive. 4. It is important to look not only into the short-term change in the shareholder value, but also the long-term measures, such as performance measures and goals to fully estimate success and failure of the acquisition. 5. Since state-owned enterprises account for almost 12% of the global FDI flow as of 2013, compared to other firms that have different ownership structure, resource constraints, governance mechanisms, and goals, all these differences need to be explored in reference to M&As in and out of EE. Managers' implication. For managers in acquiring firms, awareness of national pride to walk away from outrageous deal or to avoid bidding war. For example, managers in Volvo and IBM would have heard of Chile or Lenovo, respectively, prior to acquisition of announcement. 2. For managers without M&A experience, more risk. Diversification of risk through portfolio divergence. That is, if one revenue stream falls short, the business will still have several other income streams to fall back on and continue operation. By diversification of risk, the company can ensure sustainability for the long run. We'll be relating the findings and results of this research is Magna International. We choose this as it is a global company with 343 manufacturing operations in 28 countries, with over 158,000 team members. This company has also made some recent major acquisitions in some major emerging economy or markets, such as China and South Korea. For reference, DE means developed economy or market, and EE means emerging market or economy.
Magna's global footprint. Magna's manufacturing operation spans between 5 continents and 28 countries, with a majority of its growth in auto production and vehicle sales expected from emerging economies such as China, South America, Eastern Europe, and India. Magna is also aiming to capitalize in emerging economies within Africa by establishing a manufacturing and engineering presence in Morocco. Magna's Magna's global light vehicle production increased by 4% in 2020, including a 1% increase in North America and a 3% decrease in Europe, two of its largest markets. In addition, it also saw a 5% increase in China. Global total sales increased by 11% from 32.6 billion in 2022 to 36.2 billion 2021, primarily reflecting the launch of new programs, net strengthening of foreign currencies against the US dollar, net business combinations, higher global light vehicle production, and higher assembly volumes. Of findings. Position 2. The later EE firms expand overseas, the more likely they are to use acquisitions as an entry mode. This is shown in Magna's investment of $77 million in Yulu, India's largest electrified shared mobility provider. The company in question currently has approximately 10,000 electrified powered two-wheelers in service and operations in Bangalore, New Delhi, and Mumbai. Yulu is targeting an additional 15 cities in the next 18 months, with potential to expand beyond India in the future. Position 3. Institutional development and corporate governance quality in a target environment are positively associated with the performance of acquisitions in and out of emerging economies. It is imperative to consider the quality of an institutional development and corporate governance in the target environment when assessing the potential performance of an acquisition. Empirical research has demonstrated a positive correlation between the qualities of these elements and the performance of acquisition, both in and out of emerging economies. Institutional development refers to the strength and effectiveness of the legal, regulatory, and economic systems of a country or region. A well-developed institutional environment provides companies with access to capital, a skilled workforce, and efficient and transparent regulatory frameworks. These elements can greatly contribute to the success of an acquisition. Corporate governance, on the other hand, pertains to the systems, principles, and processes by which a company is directed and controlled. Companies that have a strong corporate governance practices tend to have efficient and transparent management practices, which can lead to improved performance for the company and its stakeholders. In light of this information, it is clear that the acquisition of G-Frig by Magna International in 2020, which was made in the country with relatively strong institutional development and corporate governance quality, has had a positive effect on the company's performance in 2021. This serves as an illustration of the significance of these factors in determining the success of acquisitions. Inherent risk factors in acquisitions. Acquisitions are subject to a range of inherent risk factors in different aspects, including regulatory and compliance, pricing, supply chain, commodities, labor relations, litigation, environmental, pensions, warranty, recall, IT, tax, and other risks. There are also limitations in the due diligence process. Due diligence is crucial in the acquisition process as it is intended to identify and mitigate risks. However, due diligence may not always provide sufficient in identifying all risks and liabilities related to the acquisition. This can be attributed to several factors, including limited access to information, time constraints for conducting due diligence, inability to access target companies' facilities or personnel, and other limitations. Furthermore, it may be identified that these risks cannot be sufficiently mitigated through appropriate contractual or other protections. This realization of any such risk could prove as a material adverse effect on the profitability of the acquiring company.